So the new Baker Hughes will combine the world's largest oil field equipment manufacturer, GE, with the #3 oil field services firm, Baker Hughes, to create a company with $32 billion in revenue that is second only to rival Schlumberger. This will be majority owned by GE, with BHI shareholders claiming the other 37.5%, and GE raising $7.4 billion to pay out a one-time special dividend of $17.50 to those shareholders. So GE's oil and gas chief, Lorenzo Simonelli, will lead the company, and the industrial giant's CEO, Jeff Immelt, saying the structure of the deal allows for flexibility around capital allocation.
Let's say the industry remains tough. This is still value accretive to both investors in a tough oil price environment. If the pricing gets better, it allows us to benefit from that as well. It's a very diversified portfolio in terms of short cycle and longer cycle operations. So I think it just gives us a chance to weather the cycle better.
So Immelt also saying that it's the right time in that cycle to invest in oil and gas, and that the transaction assumes a, quote, slow recovery of $45 to $60 a barrel for crude through 2019. So the deal is expected to close mid-2017. Analysts don't expect the same regulatory resistance that we saw to Baker Hughes' failed tie-up with Halliburton earlier this year. And that's largely because there's little overlap here. And this would create, arguably, a more formidable competitor to Schlumberger, National Oil Well Varco, and Halliburton.
I get that they're being very careful in not calling this an acquisition, but isn't that exactly what it is?
It's a...
GE is going to own 62% of this company. It's going to be called Baker Hughes, a General Electric company.
Yes.
Baker Hughes is going to control 37% of it. That sounds to me like somebody bought somebody.
And on the conference call you had...
I mean, it may not matter, other than that it makes it a very neat little package for them ultimately to spin off into their own separate publicly traded company.
And certainly this was something that came up in the call with analysts asking questions about this, and they actually said that the way this deal has been structured, that because that they can actually spin it off essentially and do that without having 80% ownership. So you could certainly make that argument here. But the other thing I'd note is that we could see a real flurry of M&A activity within this space now in light of this fact, because they are going to be a very big competitor.
We got names like National Oil Well Varco, FMC, Weatherford. They're kind of in a similar space. Halliburton, although that's bigger. Schlumberger is massive. We were at the GE Oil and Gas Center in Oklahoma last month, remember? And 16% of the revenue is now oil and gas, so it's going to...
Yeah, General Electric's revenue.
It's going to go up.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.